Hey there, it's J Rod for Rich Retirement TV. I'm here with Zach Scheidt once again for another quick hit video. Another fantastic topic, Zach.
Okay.
Cashing out of stocks. If you need to sell shares of your stock for expenses,
hmm
how do you pick which stocks to sell? And again, you being a former hedge fund manager, nobody knows this better than you.
No, we actually had a lot of clients that would have regular day-to-day expenses, and we had to manage their investments and then tie in, how do you get the cash flow that you need to run your business or to pay for your trips or whatever it was. So this is definitely an important area, and especially for retirees, because once you're retired, you need to be able to tap into that investment account at specific strategic times and in the right way so that you can pay for your expenses, but you don't want to hurt your investment prospects in the whole process of getting that cash. So whenever we think about taking expenses or taking money out of our investment account, there are three things that I look at. First is, how is my account currently invested and what areas of concentration am I in? Second, what is the specific outlook for the stocks that I'm investing in? And then third, what are my future cash needs? So looking a little bit farther down the runway. So first off, with my account, if I'm looking at my specific account and I'm trying to figure out which stocks to sell, I really want to know, where am I heavy and where am I light? Do I have a lot of tech exposure? Do I have three positions that have run up and they're really big now because they've just continued to advance? And do I have certain areas that I don't have as much money into that I maybe need a little bit more exposure there? So whenever you're thinking about selling, I'd like you to make a list of each of your positions, starting with your biggest position all the way down to the smallest one, and think about where these different positions are as far as what area of the economy they're in, and think about selling possibly some of your biggest positions because those are likely the positions that you have the most gains in already, and that way you're taking advantage of those profits. The second thing is a specific stock outlook. So we all know that companies go through really strong times. Sometimes they go through weak periods. And we want to look at our individual companies and make sure that they're all still very healthy. So is the company still generating profits? Are we still expecting growth? Or are there storms on the horizon? Maybe you have an oil company and you're starting to see oil prices move lower and you think, this might not be as an exciting opportunity as I thought it was. So in that sense, it makes sense to sell some of the stocks that have the biggest risks. And that way you're getting out of those positions while at the same time freeing up the cash that you might need for future expenses. Mm-hmm. And then finally, looking farther down the runway, I like to think about, so maybe I need to pull some cash out for this quarter because I've got, my mortgage to pay, or I've got the kids or the grandkids' college tuition, or whatever it is that you need that cash for, a trip that's coming up. Well, that's great. We definitely need to free up that much cash. But also, what about the rest of the year? What about quarter 2, quarter 3, and quarter 4 down the road? Do I need to have more cash available farther down the road? And if so, would now be a good time for me to go ahead and get ahead of the ball and pull extra cash out of the account? So if you're thinking about that, it's important to look at, where is the market right now? And I don't try to time the market specifically, like we don't want to get out right at the high or we don't want to get in right at the low. But think about things. Are some of my stocks trading very expensive right now? Do I have some really big gains that I could take some off the table? And in some cases, if things are going really, really well in your investment account, while it's tempting to just say, I'm going to let it ride, that actually might be a good time to pull a little bit more cash out than you need. So maybe sell a few more shares of that big winner and have some cash set aside. And that way, if the market pulls back later and you need that cash for your second quarter or your third quarter expenses, you don't have to sell your shares at a lower price. Mm-hmm. On the other hand, if the market is going through a really turbulent time and investors are really fearful, you might decide, I do not want to sell any more than I have to. So I'm going to cover this month's or next month's expenses, but I'm going to leave as much as I can still in the market, because I believe that the fear that's going on in Wall Street right now is a little bit too excessive, and we're going to see a bounce back. Some of the very best investors make their money by investing when things are scary and selling when things are doing very well. In fact, Nathan Rothschild, one of my favorite quotes, he was a financier from probably 200 years ago, but he said that you should always buy to the sound of cannons and sell to the sound of trumpets. In other words, the sound of cannons, scary, war's coming, we've got all kinds of trouble. That's when markets are trading at their lowest points and stocks are on sale because everybody's fearful. That's when you should be greedy and you should be buying. And then sell to the sound of trumpets. Victory is at hand. Everything's okay. We're going to be great. The economy is trucking along. We're happy. Well, if that's true and the market's really high, that might be a great time to be selling a little bit extra, putting some cash aside for a rainy day and taking advantage of those profits. So just some things to think about as you're managing your retirement and you're trying to figure out when to invest and when to pull cash out for the expenses that you'll normally have.
Zach, great stuff. And actually had a question, something we hear a lot from readers. You mentioned in the other specific stock outlook, you want to, take a look at your account size, you positions you're fatter in. Does the timing of when you bought a position factor into your strategy here? Like if I bought a stock 10 years ago, should I sell that one before or after a stock that I bought maybe, a year or two ago?
So two things on that. One is I don't like to think about, how long have I held this position because, you're more committed to it or less committed to it. So that I think you need to be more logically focused on what's happening right now and what is the current outlook for your company. With that said, the only exception that I would make there is, have you held the stock? If you've held a stock for less than a year, just know that when you sell, if you're selling in a regular brokerage account, you're likely to have to pay higher taxes on those gains. Whereas if you hold things for more than a year, you have what's called long-term capital gains and typically a lower tax rate. Now, this is something you'll need to talk to your personal accountant about and make sure that, depending on whether it's in an IRA or a 401k or a regular taxable brokerage account, but it is helpful to understand what's going on tax-wise if you have to sell a position. That said, if there is a dangerous position that you're in and you want to wait another 3 months so that you don't have to pay long-term taxes on it, that's a scary thing to do. I would say if you have a major risk and you want to get out of a position, get out of it. Don't wait for that tax event, because in some cases you can lose a lot more money in the position rather than saving money on your taxes. But yeah, it's more a matter of looking at what's going on right now and where you expect the stock to go than looking too far back to see when did I actually purchase the stock.
So the future is more important than the past.
Yes.
Great stuff. Well, Zach, thanks again. A fantastic encapsulation of your strategy. I know you probably squished a lot of that down from all the years that you've been doing this, but great stuff.
Well, good.
Well, thanks so much, Zach, once again for Rich Retirement TV. I'm Jay Rod here with Zach Scheidt, and we'll see you next time.
See you guys.